Welcome everybody to the first TradeLab case study video. Today we're going to be diving deep into Tesla and its move from 2019 through 2021. This obviously was a monster winner. Many of you out there probably traded it. I did. It was one of my top performing stocks that year, and it just created so many amazing opportunities. But I know personally, I by no means got as much as I should have of it, both in terms of sizing as well as riding it for the whole move. So it's really great to go back, take a look at the setups, the entry tactics you could have used, the sell rules you could have used, the characteristics that maybe would have gotten it on your radar earlier. That's really the focus of today, to create that kind of blueprint that we can then apply to future market leaders and hopefully find the next Tesla. Maybe the next Tesla is Tesla. We'll have to see. But there'll always be a liquid market leader like Tesla. Obviously, over the past 2 years, it's really been NVIDIA and SMCI a little bit, not nearly as liquid. It's really been NVIDIA. There's always this kind of one liquid market leader that offers fantastic setups, clean trading, allowing you to stick for that larger move. And I think Tesla is an amazing stock to study. Not just this move. We'll probably at some point go back and study the IPO move, which also was fantastic, but we can learn so much about earnings gaps, base breakouts, relative strength from looking at Tesla during this period where it made a 1,900% move. That's not too bad. If you can just catch a piece of that, it can really make your year and really expand your account, which is what we're all trying to do. So let's go ahead and dive in. Key goals of the webinar. First, analyze the fundamental catalysts and themes that drove Tesla's 1,900% move back in 2019 through 2021. We're not only going to be looking at technicals today, although that is kind of the focus. We'll also be discussing throughout, key news events that kind of drove breakouts, led to, what actually created this move. That's what's really important. And of course, we're going to run through the technical setups and entry points that you could have used to enter, go into detail into, how you could have executed these trades and jumped on for the ride. And then, as I mentioned, the overarching goal here is to build a blueprint to catch future market leaders. It's all well and good to look in hindsight at Tesla, but how can we kind of distill the key framework that we can then use and apply to find the next one in the next significant uptrend. So these are the key goals of the webinar, and I think we'll satisfy each of those here today. So let's go ahead and dive right in. Here's the agenda. First, kind of visualizing the full move. We'll take a big step back. Then we'll break it down move by move. 2019, starting with the earnings gap. We'll discuss that in depth. 2020 from the VCP large base after the March 2020 correction. We'll dive into that. Then in 2021, we've got that climax move that we'll go ahead and examine as well. And then finally, the current move in 2024. We'll take a brief look at the recent price action. Then we'll sum everything up with some key lessons, important takeaways, and then kind of come up with that final TML characteristics checklist that then, of course, we can go apply and find the next Tesla. So let's go ahead and dive right in. First, taking a step back, here we are on a weekly chart in deep view. This is kind of how I've broken down the moves. We've got this initial move in the fall of 2019, starting in, I believe, October. We had the earnings gap. The market also was ripping into the end of the year. It was kind of the best time of year to be trading in 2019, especially a very choppy year. But Tesla, excelled during this time and had an earnings gap, and then quickly went into a climax run here that was only really ended with the March 2020 correction. So it's kind of interesting how those two key events lined up. But this is kind of the first move, and we'll break into it in depth here in just a minute. Then move two kind of starts after that March 2020 correction. You had some potential entry points down in here, right where this on the weekly, it's an inside week and up. That's kind of the first potential actionable spot, and we'll take a look at that. Then this goes through multiple bases that will each break down. And then this last base ultimately doesn't resolve to the upside. We then correct, pull back to the 40-week moving average, set up this longer term base. And then that starts kind of move three, which is a lot shorter, about 6 weeks long, but led to a 60% gain in 6 weeks. Not too shabby, before ultimately Tesla obviously never pushed higher than this until the recent price action and went to an extensive correction, dropped over 74%, I think maybe 75% from these highs before ultimately acting well towards the end of 2024 and breaking out through this high. So definitely a lot to cover today. This is going to be a lot of fun. And as we go through, please drop your questions in the chat. Drop your thoughts in the general chat as well. Talk amongst yourselves. And if you have any key inputs, definitely add them. If there's some important news events that you remember happening that led to price action moves, definitely let us know in the chat as well. All right. So let's dive into move one. This was a 180% in 15 weeks move. The main setup that you could have used to execute this was an earnings gap. There were also follow-on kind of range breakouts that we'll cover where you definitely could have entered for swing as well as position trades and catch the majority of this move. And really the driver of this was surprise profitability. And we'll get into that in just a second here. But at this point, Tesla had been basing pretty much for almost 4, maybe 5 years at this point. It had a really nice move from its IPO, but kind of the key question with Tesla was it going to be profitable? Was it actually going to work, that model? There's a lot of uncertainty around that. And the surprise profitability that it had in that key quarter, which we'll get into, caused that earnings gap up and the eventual breakout of all-time highs at that point and climax move into the end of 2019. So let's dive into the fundamentals and kind of the story behind this setup here. We haven't even looked at a chart of this yet, but just wanted to kind of set the scene here with the fundamentals. You can see Tesla was up and down in terms of profitability, making 50 cents, losing 60 cents. Good revenue growth here, so that's definitely a positive. But it wasn't showing sustained profitability, and that kind of happened until this quarter here that was reported October 23rd, 2019, after the market close. You can see they were surprisingly profitable. They were supposed to lose 8 cents. Instead, they went up gaining 12 cents. And more important than that, which is a huge percentage, obviously, improvement there and surprise. More important than that, they were ahead of schedule on a new factory. You can see this blurb here from CNBC back in this time. They also were working on the Model Y at this point, and everything was kind of moving ahead of expectations, ahead of what the street thought was happening. And it looked like they were really turning a quarter in terms of profitability. And that's what really drives big market moves and long stage 2 uptrends. And it's a key thing to look out for in market leaders, especially recent IPOs, where they moved up. There's a lot of hype about the product, whatever, but ultimately they roll over, form a big base. Then at that point, what we're waiting for and what the market's really waiting for is profitability and proof of concept that their business model really works. And that certainty allows larger institutions to invest, ultimately driving up the share price as they accumulate shares. And Tesla wasn't necessarily a recent IPO at this point. It had already had a long move, but there was still that uncertainty, which is kind of similar to recent IPOs, that it seemed like they were finally turning the corner and solving. So that's kind of what drove this overall move. And it's always interesting to take a look at, what causes these earnings gaps. And you kind of want to think to yourself, what is the grade of this catalyst? Is this a catalyst that just is going to be, a pop and then it will fade like a drug announcement from a biotech? Or is this showing a sustained change in how the market is viewing the stock and viewing the future prospects, future earnings growth of the stock? And this type of report, for sure, for Tesla, definitely turned the corner. And in hindsight, would have been an amazing time to really start getting aggressive in the name. So here's another weekly chart of the move. This is where this earnings gap that we were just talking about, the drivers behind it, occurred. This is the longer term base that really is only half of the base. There was kind of a further base back here, but it's basically a 4-year base that this was the key all-time high. And you can see, it respect that level multiple times. We had been in a drawdown. We had started to move off the lows, formed kind of a lower base within this. And that's what we are breaking out of on this earnings gap, eventually leading to this climax run into the end of 2020. As I mentioned, this was about, I think, 15 week move. And 15 weeks here and 180% from the earnings gap here. There are also follow-on buy points. You can see a nice pivot down in the space. This breakout also would have worked really nicely. And then it really didn't really give you away, and there wasn't much of a pause. It was just go, 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 getting over exuberant to the upside. Big fade off the top here. We'll take a look at the daily chart for sure. And eventually this rolled over into the 2020 correction. But definitely a move worth studying and really worth looking at in depth, especially if you want to get better at trading these earnings gaps and judging the quality of the catalyst behind that. That's a key thing I want to talk about today. Is not all catalysts are created equal. You want to focus on ones that significantly change how the market is going to analyze a stock and consider its future growth. Rye also really judges the volume that comes in on the daily chart of these names, and that's a huge part of it as well. You want to see an overwhelmingly positive reaction to the earnings report. That's what's going to drive a sustained trend and likely mean that there's going to be other opportunities to get in after that earnings gap. All right, so here we are on a daily chart. These were huge volume days, very, very high volume. We had an earnings gap, then follow-on action, very strong action here, and then a little bit of a fade, the start of a range here. But first, taking a step back, this again is the same move we just looked at on the weekly chart, just on the daily. You can see that same climax type action right here, lower highs, and then it rolls over into the 2020 correction. But overall, going to the earnings gap, and we'll take a closer look at both this area as well as this area as well, which really are the primed entry points. But in terms of what I want to point out here, again, earnings gap on explosive volume, follow-on volume even higher than the prior volume right here. And then you get a nice tight range here. You can see how it pulls back, but doesn't want to pull back too hard, and instead is supported, forms a range, pushes up here. This would have been another potential buy point, as we'll get into in just a minute. But then what happens is after this nice move up, we get a gap down. And what causes this gap down? It's the Cybertruck announcement, which I can see I misspelled here, unfortunately. But it's the Cybertruck announcement that just kind of, hit people a storm. There's of course the incident with the window breaking, all of that. But it was just kind of an excuse to sell down the stock, which then reforms, holds up well, gets really nice and quiet and tight here against the 21 EMA, and then ultimately sets up another spot right here. Against the 21 EMA, the pop, the range from the 21 EMA, and then this sets up another spot right below this key pivot. RMV gets very, very low, and we break out, reconfirm, and then ultimately break out of this all-time high. If we go back to this prior chart, you can see this high was set all the way back in this area. We finally get a breakout on the momentum caused by the change in, the analysts here, and this leads to the strong move, holding the 10 EMA this entire move up into the climax run. So that's kind of the high-level view of this move, and we'll take a look at each of these parts kind of under a microscope here. So first, I want to talk about the earnings gap because obviously you have to kind of set up a routine to be able to trade these on day one, day two, to make sure you're discovering potential really strong earnings gaps and being able to judge the catalyst. If you don't get it on your radar, you won't be able to trade it. So here what I've got is a 5-minute chart of the 2019 earnings gap. It's awesome and deep view that you're able to go back and look intraday at these because you really need to study these. But again, this is a 5-minute chart. This is day one action right here. So we have the gap up, fade, and then it forms this intraday base, and that sets up the breakout day two. So if we go back to this view right here, this is the day one action where we had a gap up, fade, and then strong action into the end of the day. And then the next day we have the breakout. This is the same view on a intraday chart. So again, gap up, fade, strong formation here. Sets up this base, and then on the next day we have an initial move down. We hold the VWAP from this first bar here, and then set up a U-turn, break out through the pivot. This would have been a really good prime entry point. The risk to the low of the day, just below this range, which is where I usually do it, is just over 1%. I think it's 1.3%, and you get immediate traction, pushes out through the high of that first day, sets up a mini flag. This could have been a potential add point. And at that point, you're just off to the races, trending nicely above the moving averages and trending well to end of the day and giving you plenty of cushion to hold and potentially ride it for a big move. So this is ideal day two action. You have a nice clear pivot set in day one. We initially are weak on the day, form a U-turn, have a clear buy point here, easy to manage risk around 1%. With this, you can really size up and potentially sell some into strength at the end of the day, or just if you're looking to establish a position trade, get a really nice size position on day two here. And in previous trade opportunity case studies, I've analyzed and talked through a bunch of other earnings gaps. I think it's a key setup that everybody needs to learn. So definitely suggest you go back and review those. We talked through a bunch of them in the past few weeks on this in the TradeLab as well. But this is a great chart to study. Go out, print this out, and this is textbook day 2 action. All right, here's a 65-minute time frame of the earnings gap move. So again, this is day 1. We have an initial pull in, recovery, tight base to end out the day. The next day, we have an initial move down and breakout. You can see it really clearly on the intraday chart how tight it was in here. Volume declining, and then we see volume explode, price expand as well, and it gives you a really nice cushion into the end of the day. Later, as we saw earlier, we pull back a little bit, form a tight range, set up another spot for a swing trade, and then this is the gap up that we talked about related to the Cybertruck announcement here. So I love the 65-minute time frame. It really helps kind of visualize the intraday time frame, but in a way that still cuts down the noise. So if you're a swing trader, I highly recommend checking this out. It allows you to really see those ranges and clear pivots really nice and easily. And this is the same view on a 65-minute time frame. All right, so here we are back on a daily. This is again the earnings gap day 2 entry right here early in the morning. Would have been a prime entry. This would have been another potential add spot. This one as well through this high. But you might have gotten stopped out. If you entered late here, you probably were stopped out because I think at this point you only had about a 3% cushion. You still had enough to hold, but you would have had to kind of deal with all this range building and would have gotten a little bit risky to hold that and just kind of trust it. But if you enter day 2, likely you're still in it. You got about 5 to 8% cushion at this point. You're just holding it. You're watching it versus the 21 EMA and looking and seeing how constructive it's acting. It's pulling back into 21 EMA, but never really fading below it. By the end of the day, it's always tight. Volume is declining as we're consolidating and tightening up here. It's actually setting multiple other key pivots here. One at this high, one it hit this high, and that lines up with these highs as well. And then these would be additional buy points or add points depending on if you're starting the position or just looking to trade a swing trade. This is what's really important with these type of earnings gaps, especially when there's a good catalyst, is there's going to be spots like this right here, a range that forms. It moves up, pulls back, forms another range. There's going to be other entries outside of the day 1 and day 2 that you can use to jump on the trend if it's going to be a sustained trend. So don't feel like you need to trade day 1. Day 2 is pretty prime as well. But even if you miss these, you can wait for the next range to form where you can manage risk really easily versus the low of a range, low of the day, or later on against the 21 EMA, that first pullback. And the benefit of that is you already kind of see the cards on the table. The stock has already shown that it's spectacular because of this day 1 and day 2 action. It's showing that, the mindset has shifted of the market. It's now under accumulation, and it gives you a little bit more confidence to then wait for your spot and enter while managing risk through your entry tactic. So again, here is the Cybertruck day. No real follow through lower, however, from this gap down. That's a key thing to note. And that's a sign, that's a very positive sign. And as I mentioned, we go quiet and tight. We respect that 21 EMA. Here we get the range breakout. We get a nice move up to this pivot. You can see RMV5 goes right to 0 at this point, showing that tight action. And we get reconfirmation. This could have been another add spot, but it's a little bit later than these add spots right here. But you could manage your risk really nicely versus the 10 EMA. You can see the respect for that. And throughout this move, the stock really doesn't like to close below the 10 EMA. And the strongest stocks under accumulation are going to do this. We've seen this from Reddit. We've seen this from A-Lab. Even when the market's pulling in, they're trying to hold that 10 EMA. And that's what the strongest stocks with the strongest relative strength are doing during this time. I want to go back to the daily here and talk through the rest of the move here. So far, we've kind of covered this area right here, pointed out potential entry points through the ranges here. But then throughout this move, as I mentioned, here is the 10 EMA, this gray line here. We have a nice oops reversal, which could have been an add spot or just an entry point for a swing trade. And then you can see how we get extended, pull back to the 10 EMA, get extended, pull back to the 10 EMA, and then kind of the character changes of the name. Yes, we're getting extended, but we're seeing more and more gap ups. There's a gap here, gap up, gap here, many days up in a row, and we're getting climactic. You never know this bar's coming, and you never know that this gap bar's coming, but the signs were there that you should kind of be looking to expect climactic type action. Many gaps up in a row, no real give back, more extensions. And this day right here should really be like, hey, you know, things are getting crazy, things are getting too easy. Maybe want to sell some of my position into strength. You never know if you're going to gap up the next day like it did, or gap down the next day like it did the following day. So selling some into strength, whether it's a third, whether it's a half, and then holding the rest, and just continuously, you know, trailing your stop at the lows of the day on your remainder, or selling even more into strength in here. That's definitely prudent when the stock gets climactic. This doesn't happen too much, but when it does, you want to have a plan going into it. You don't just want to be reacting to your emotions, because next thing you know, we're down 20% off the highs and you're selling at the lows instead of having sold some into strength, as you know the stock is getting extended. So here, I guess, again, we get this really strong expansion bar. The next day we have another gap up, push higher. At this point, it's getting so stretched, it's getting parabolic here. You want to be selling some into strength. And then as we kind of put in an indecision bar where we close right near the open, you might want to be selling and letting even more go, maybe have a quarter left, and then sell the rest as we break below this low, gap lower, because then we pull back sharply to the 10 EMA. We do ultimately reset, and maybe there's even the potential for a swing trade here, but the character of the stock is kind of changed. And we almost saw this with MSTR recently. And let me actually bring up that chart here. MSTR, if I can type here. You can see this candle, this bar changed everything. And again, these bars look climactic. You don't know this is coming, but a stock can easily gap up when it's extended and completely reverse lower. So that's why you want to be prudent, sell to strength, especially your last bit if it undercuts the low of the day or the day prior to that, whatever your rule is. But you can see how it wasn't quite the same. It tried to set up here a few times, but now has since rolled over and just isn't acting quite right. And Tesla was kind of the same way. We did almost move all the way up to this low, but then we have kind of an island reversal where we have a gap up, range, gap down, and then from that point on, it really rolls over and gets below the moving averages and then goes into that eventual March correction. So that's kind of the climax run from this first move number one. So let me pause there and see if there's any questions that I can cover here today. And are there any questions specifically on move one? Drop them in the chat or in the Q&A section, actually. Catherine, this is the 10 EMA on the daily time frame. And when I switch to intraday time frames, I pretty much keep the same moving averages, same period moving averages. So the 21 EMA is going to be different on a daily versus an intraday. But I also like to always know where the daily 21 EMA is on the intraday chart. So I can, do some finagling, do some quick math and set it up so I can see that moving average on those intraday time frames. Let's see here. Why are you using the 65-minute time frame instead of a 1 hour? This is because it breaks the day down evenly. 1 hour time frame means the first 30 minutes count more than the rest of the day. But a 65 breaks everything into equal chunks, into equal 6 bars rather during the day. All right. Is there anywhere on the chart, I see a question from John, is there anywhere on the chart where the RMV would help identify entry points? Yes. So after the earnings gap, it identifies this range right here, goes quickly to 0. Then also during this range, there's multiple times where it goes to 0. And so if you're running a screen every day, looking for stocks with RMV less than 5, Tesla will be on your radar here. And I loved a couple RMV less than 5 with relative strength over a 1 month or 3 month basis of greater than 95. And Tesla, with the strong earnings gap, powerful move higher, would definitely show up on that screen, and it would show up on the DeFi leader screen. And then you just have to kind of sort by RMV. It would show up multiple times. And even before this reconfirmation, RMV 15 goes below this level here, definitely below 15, and RMV 5 went to 0 on that day. So there's multiple spots where from these trading ranges, RMV would have helped you identify those tight areas. All right. Anton asks, how does compare with market search? I use DeFi. This is not TradingView. This is DeFi. And it's much better for position trading, flexibility, customizability, and we're always investing into new features, data points, all of that. So if you're using Market Surge, definitely recommend checking out Deep View. We've got a holiday sale going on right now, so this is the perfect time to give us a shot. All right. So here's day one. Here's the 65-minute time frame. Here's a zoomed in view of these ranges here. So here I've annotated the different ranges where we could have bought. Again, the oops reversal here would have been a secondary buy point. Really, you want to be establishing, and this is from a position trader perspective, you want to be establishing your position either on day two here or from this tight range. And if you've got your core from here, you're in great shape. You can sell a little bit into strength. You can add it back on an opportunity like this, and you can just hold for that climax run. Even if you're a swing trader, down here is best. You can sell some into strength on this bar right here as it's approaching all-time highs, hold some, add some back, but really kind of this area and emerging from this area, as well as day two, are probably the most ideal buy points in hindsight of this period in Tesla. And here's a 65-minute time frame of this area right here. So look at this on the daily chart. Here's the gap down. Then here's that same gap down, and this is a 65-minute time frame. And this really shows textbook accumulation, where you've got moves up, tightness, moves up, tightness, moves up, tightness. This is what a stock looks like when it's under accumulation. And this really shows the key pivots here. This would have been a really good buy point in the morning. Then we had this other pivot. This would have been another good buy point. And you can manage risk at these higher lows, as well as the 21 EMA on this time frame. And you can see how it holds us this entire move up towards those all-time highs. So this type of look where we move up, go sideways, move up, go sideways is what you want to look for on those key breakouts and moves from those ranges. All right, let me get a quick sip of water here. Here's a quick checklist. This is a screenshot from one of my TradeLab opportunity case studies. This is kind of post-gap setup criteria that what I'm looking for. And this is what comes into play when we're trying to find these type of ranges and then these type of ranges here. So what we're looking for is a strong gap, highest volume in 1 year or bigger, or big volume from a clean base breakout. Tesla fulfilled all that criteria. A strong catalyst. We talked about the fundamental drivers of this move, and Tesla definitely had kind of a game-changing catalyst in terms of future earnings and sales growth. Then in number 3, we're looking for in general, a strong market and or gap up seeing follow through. Tesla during this time was part of an overall big move into the end of the year from October, basically until the 2020 correction. So we had a very strong market. We want to see an orderly pullback. So we go back here. This did have a gap down, but it holds and then goes very nice and tight and quiet, volume declining. That's what I mean when I say orderly pullback. This is another textbook example. Pullback, holding above the 10 EMA, volume declining on the pullback, really price going sideways instead of sharp declines. That's what we're looking for when we say orderly pullbacks. We want to see that a sign that the pullback might be ending. This could be a tight range on a very short short time frame, an upside reversal day. That's what we're looking for. And then ideally we have a confluence with the 10 EMA or 21 EMA. So if we go back here, where's this range form? Right on the 21 EMA, this bold line right here. Where's this form? Near the 10 EMA area. And the best earnings gaps and the ranges that form after them happen against those two key moving averages. So this is a good quick checklist for you guys to write down and screenshot to use after when you're considering future gaps and setups after an earnings gap or catalyst gap. And this is just kind of showing the market during this time. As I mentioned, the market was super strong back in this fall timeframe. This is 2019. This is the earnings gap that we're talking about. It broke out from this base right when the market was emerging from a correction. And this is when the most powerful moves are going to occur, is when we have a powerful breakout or earnings gap from a nice base as the market itself is just lifting and starting a new uptrend. And you can see how powerful this move was. And that kind of scaled this move. In a weaker market, this wouldn't have been as strong, but we had a very strong market that rose, I think, about 20%, at least 15% during this time. And Tesla, of course, went up 180%. So as Mark Minervini says, you get leverage with these type of stocks that are really, really powerful when you buy them correctly at the right time. So this is just kind of showing a comparison of the market versus this move here. Always good to remember this context. All right, so that's move 1. And there really we are focusing on the earnings gap and then the range after the earnings gap. Move two was bigger, both in magnitude as well as duration, 700% in 45 weeks. The main setup we'll be discussing is the VCP base breakout setup. And the main driver of this one, because at this point it was profitable, it was executing well, was the execution of Tesla and the continued improvement of earnings and sales, the continued growth. So we had good execution of vehicle deliveries ahead of schedule, strong earnings growth, sales growth. The EV theme in general was really hot. NIO was another great name for me that year. And then, of course, we had the very hot market coming out of April 2020, because of course the Fed increasing liquidity, all of that really drove everything higher, not just Tesla, but of course a strong market lifts all boats and makes market leaders perform even better than they would have in a normal environment. So here's a weekly chart of move number two from April of 2020 through January 2021. Again, this was 700% in 45 weeks. This was the end of the climax run that we just analyzed. Then we had the 2020 correction. And very quickly, before we get into this move, very interesting where this base bottomed. You can see we had a nice upside reversal weekly bar. But what is this green line? This green line is the prior all-time high that the stock broke out of shortly after this earnings gap. So you can see we retraced all that move in just 4 or 5 weeks. That's why it's so important to have sell rules. But we found support right at that previous all-time high and the confluence of the 40-week moving average. This is really important. When you see confluence like this, we see a bottoming action. This is a sign to watch the stock more carefully. Look for a potential entry point if we do see a first higher low, a first reclaim of the 21 EMA after something like this occurs. And we'll take a look more closely at that when we get to the daily charts. But this is base one. We have a nice VCP. This is the big correction. Then it gets tighter and tighter and tighter right near this new all-time high. We get a breakout. We get base two, a lot shorter, a lot tighter. And then we break out slightly, form a choppier base and longer base. And then on the S&P 500 inclusion, we get another gap up, which we'll take a look at in the daily, and have a nice, powerful move until base four, which is very tight, but ultimately sucks everybody in that didn't catch any of this and chews them out. And we ultimately roll over and base before the next move that we'll talk about later. But that's kind of the overall move in terms of move number two. Here is this first base. So right now we're focusing now on this base right here on the daily chart. This is the climax top, the correction. This is the confluence of the all-time high as well as the 200-day / 40-week moving average. We have a 50% rally off the lows. And then what do? We pull back, form a higher low, move back up, break market structure, have a nice tight range before we do that, break higher. So this would have been kind of the first ideal buy point here. Then we continually kind of move up, go tight, move up, tighten, 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 get very tight in this area. Another breakout, go tight, breakout, go very tight right on top of the all-time high. And then that's what sets up the breakout from this base. But right here, even though it's a really good entry point from a tight range, you could have kind of worked yourself in earlier. And this is why Oliver Kell won the 2020 U Investing Championship, is because he established a core position in Tesla right here in this area, in this tight range, way before it was really on everybody's radar. And what was he looking for? He saw this respect for the all-time high and 200-day moving average, the strong rally off the lows, then the higher low setup, and how it got really nice and tight on the 21 EMA. We had the wedge pop right here, goes quiet and tight, and then the break from this tight area. And he established his core right in this area and, was trading it throughout the year. But having that core right here really set the stage for, a powerful move. If you can get a core 25% in a name like this, that makes a move like that, it's not hard to have a triple digit year. And Tesla obviously was the liquid leader of 2020. So going through here again, we have a 50% rally off lows, but I do want to focus in on this area right here, because if you think about your psychology and people looking at the chart here, you have a move off lows, but you just had this monster correction down. So right now, you're not really thinking about buying in this area. You do have a 50% rally, but then as we start to roll over, immediately you just think, hey, there's going to be another leg down. It's breaking below the 10 EMA. It was rejected at the 21 EMA. It's going to revisit the 200-day moving average. And that's kind of your expectation, right? Going into, if you think about on this day, if you look at this chart, what would you be thinking? It's going to your expectation is gonna test the 200-day moving average. Instead, we have a gap up. And although we don't close great here, we close well off this close. So this is a positive expectation breaker because it broke your negative expectation, and instead the stock gapped up and held. And you might see in the TradeLab report, I say positive expectation breaker quite a bit because it's a really good entry tactic and sign of support, sign of a bid that you should learn to key in on. And all the great leaders have them in their charts at key turning points. So here we have a positive expectation breaker. We close kind of negatively again. So again, this might have been a false move. You might still be thinking, hey, we're going to roll over. But then we have another positive expectation breaker. We gap up after a low closing range. That's kind of the definition of the positive expectation breaker. And then we get a really nice tight day, holding right near these highs, good close. And that sets us up for this wedge pop. So this could have been an entry point. And then we don't give anything back. We go quiet and tight. Look how low the volume is on these 2 days right here. And then we break above this tight area, start to move higher. And from there on, we're off to the races. We move up. This would have been another really good looking spot to add, but you're likely stopped down on earnings. Earnings were right this day. We had a big reversal down. We push all the way down to the 21 EMA, but we hold there. And again, this is kind of a similar psychology wise to the positive expectation breaker back in here. We pull down to the 21 EMA, but there's no follow through down through that. After these 2 days, your expectation is, oh, this is going to roll over again. We're going to retest, the 200-day moving average. Instead, we have a strong move higher, good close, and that sets us up to really tighten against the 21 EMA. This is a key sign of accumulation where low volume, very tight action, and then from there we break out, go tight, break out, go tight. As I mentioned before, kind of the textbook, sign of accumulation. I want to pause here for a second and give you guys a challenge here because I want this to be active participation. What do you guys notice about the price action of Tesla and where it is with respect to its all-time high versus the relative strength lineup here? This is a plot of the Tesla over the SPY. So this plot's relative performance versus the market. And these dots show relative strength new highs before price. So what do you notice about the stock and its relative performance versus the all-time high versus the RS line? I'll give you guys a hit. There's a key characteristic that we look for. I said it, these circles signify it, but I wanted to see in the chat what you guys see with respect to the RS line versus the price action and how that might indicate that Tesla is a true market leader. Yeah, Amit got it. Very nice. Relative strength of the stock starts getting higher before the price started going up. That's a clear sign of RS leader. Very nice. Yeah, RS line new high. So a lot of people saying exactly what we're looking for. And this was shown in Zoom. This was shown in Peloton. All the great leaders of 2020 showed this exact same characteristic. If you look back at the 2020 model book, and we'll show the Tesla slide from the model book that Ross Haber made of this period, which is excellent. All of them pretty much showed this RS line new high before price. That's a key market leader characteristic that you should look out for. And whenever there's a significant correction like this, the stocks that make RS new highs before price, that rally the fastest, the furthest, are likely going to be your leaders when the overall market pressure comes off, and then they can go on really strong runs like Tesla did if the market continues to be really nice. So this characteristic, RS new high before price, definitely something to look out for. And we have it kind of built into the deep view RS line where these dots show up whenever that is the case. All right, so we're going to zoom in here. I already mentioned here 50% rally, positive expectation breaker, but I just want to zoom in here to make sure you guys kind of can see that really clearly. And this area, you can see how tight it gets. RMV5 goes to 0 right before the breakout and move higher. It's amazing how it does that. And this is the wedge pop here, and very constructive action here that definitely you should go back and study for yourselves on your own time. Here is a zoom in on the right side of that base. So here we get really nice tight action. This was potentially actionable within this overall tight range where you had an inside day, nice upside reversal off the 21 EMA, and then an inside day, and then we get a breakout from that inside day. That could have been your buy point right there. It gaps up the next day, breaks out of this range, goes tight again, pulls into the 10 EMA, breaks out, goes tight against the 10 EMA again, pulls back to 21 EMA. I actually bought this day, rode this nicely here. This is my entry point, but really nice move again. So these type of spots where you get a tight range and then you get an upside reversal or an inside day, those kind of prime the tight range setup. And that's really when you want to be paying attention and looking for a breakout through a pivot where you can manage risk versus the low of the day, the 21 EMA, whatever kind of makes sense for your risk profile. I like keeping it within 3%. But this type of action, again, the upside reversal, inside day, or here with an outside day, that's what kind of primes the setup and lets you know, all right, this is ready to go. This is where I want to be jumping on and giving it a shot within an overall tight range, within an overall tight setup, and within an overall good market as well. So that's another key characteristic I want to point out here. This nice inside day, push higher, early entry point gets you on for the ride. But even if you wait here, we get a breakout. It's a little bit extended from the last range here. So again, if you just bought the all-time high breakout, you're likely going to get stopped out. That's what this mess here is. But it retightens, gets very, very tight here. You can see RMV goes to 0. And then we pull back again. And then we get the move higher breakout into the next base. So this is another really good spot to study here on Tesla, where you get these tight consolidations. And then kind of the priming of them are these upside reversals. There's one here, inside day, breakout. Here we get upside reversal off the 21 EMA, consolidation day, and then another test of the 21 EMA, outside day. That's what primes the setup, and then you can catch along for the ride. You don't want to be kind of dealing with this chop. You want to be waiting for the breakout and waiting for the setup to say, all right, I'm ready to go. That's when you want to put on risk and put on size to catch this breakout move. Here's a quick checklist on things I look for these range, tight ranges here. I want to look for supportive action at the 10 EMA or 21 EMA area, confluence with other significant levels, like in this case, the IPO key high. Actually, in this case, this is from another trade case study. Here, in this case, the significant level is the green line, the all-time high, which if we go back to here, is the high set back in here. You can see how this tight area happens right near this significant key level. That's what we're looking for. And ideally, we have lower volume in the pullback. Look at the volume during this tight action, low volume. Here again, moving average of volume is declining, very tight volume. That's what tells you that there's a lot of accumulation going on. There's no give back. Institutions are silently accumulating, any supply that comes to market. And that's where we get these explosive moves from, is that from that accumulation, from that tightening of price action, from that coiledness comes expansion that we can ride as traders. All right, here's a 65-minute chart. This is the inside day and up that we saw. That we saw earlier. This is the move higher, and then you can see the very tight action, shake to the 21 EMA again, reclaim of the all-time high on the 65-minute, and then from there we're just off to the races, going up, tight, and breaking out constructively. So let me pause there. Any questions on this first base here, or anything that you guys noticed that I may have missed here? Frenchie asks, would you call this tight range a Darvis box? Darvis box is more like move up, Darvis box, move up, Darvis box, move up, Darvis box. This tight range might be a Darvis box, move up, another Darvis box. So these boxes within this larger box, I would call these kind of Darvis boxes. And that's kind of how you viewed it as well. A stock would move up to a 55, 45 box. Then it would, get comfortable there, then break out to a 65, 58 box. So that's kind of how you can kind of visualize it with respect to Darvis's methodology. All right. How tight should price be to be considered tight? I'd say anything, the tighter the better. And it's kind of relative to the character of the stock. This is a pretty high ADR stock. And that's one of the benefits of RMV, is that it takes into account that character and shows you tight price action, even if the stock is pretty wild. But anything, a 3-day range of about 5% is pretty tight. 3% is very, very tight, especially if it's a 4 ADR stock or 3 ADR stock. So that's kind of a rule of thumb. But that's why I like RMV as an objective tool, is you don't have to say, hey, this looks pretty tight. You have kind of an objective measure of, this is a tight range right here because RMV is 0. And that's what it kind of gives you objectivity with respect to that. My question above Frenchie's here. Do you often see the test of the 10 a.m. after the breakout of the tight range? The best breakouts just go, and in the first few minutes of the day, after maybe a little bit of a pullback, like this day right here, just went. And usually the best breakouts just go right off the bat, and there's not really a retest. If there is a pullback, it's probably not going to be as powerful a breakout there. Let's see here. Is there a date on the chart? I see the month looking for the year. This is 2020. So this is April 8th of 2020 right here. This is the 2020 correction. And then this is April of 2020 through July of 2020. This is where the breakout was. I think it was maybe maybe June 29th here was this breakout. I don't quite remember here. All right. So that's a zoom in there. That's a zoom in there. Here's a 65-minute time frame, and then here's a quick checklist. I actually took this from the VCP webinar I did, which you can find on the DFU YouTube channel. But this is a good kind of summary of what I look for when trading an overall base like this and trading these tight area spots. So first, you want to have a strong idea. So this could be based on a DFU preset, RMV, another good growth stock screen or however you're finding the stock. Then you want to build a focus list of the tightest setups, the most mature bases, near a key level like the all-time high in the case with Tesla. Then you want to consider other criteria, the theme of the stock. EVs here in this case were very strong. The earnings growth, sales growth, the N factor. EV in of itself is an N factor here. Then you can execute using one of 4 entry tactics, which we'll cover in just a second. And a lot of people say, how do you catch the breakouts? How do you have it on your radar when it's breaking out? Use your alerts. They're completely free. I think at DFU, we allow you to have hundreds of alerts, and they basically allow the computer to do the work for you and watch the stocks on your focus list so that you're only alerted when you want to be alerted. And I would place them just below the pivot point, or maybe, a little bit, 1%, 2% below the pivot point. So as the stock is pushing up towards that pivot, you're alerted, you bring it up on your screen, you have the order ready with your broker on the other screen, and you're ready to go ahead and execute. You've got your plan set, you know what risk you're going to taking, what position size you want. You have that set all in advance so that when your alert goes off, you're ready to go. Then I also look for high volume run rate on that breakout, but that's just confirmation. I'm watching price action first and foremost, and then I'm looking for explosive price and volume. I don't want to see, any pull in during the day. I just want to see a constant trend. The best breakouts have that, and Tesla definitely, showed that character in that July breakout. So here's kind of the, if we think about a 3 or 4 day range here, these are 4 options, what I'm going to go through of ways to trade those ranges. So if we go back here, you've got this, 3-day range here. You've got this 5-day range here. This is how to trade a mini range like that of a few days. So you can accumulate versus the lows. You can enter as it pulls in towards the low of the range, enter as it pushes back up, setting your stop, just below that range. This gives you the best price, but you're at a risk of being stopped out. You might have to, have multiple entries where you might get stopped out a few times, but you're taking very small losses. But, the con here is that, yes, you're taking small losses, but you might take more of them. And you have to be watching the stock constantly to accumulate versus the low like this. But if there's like a key level on a higher time frame, like an all-time high or, a 21 EMA, this is often a really good tactic to manage risk. Setting that stop just below that key level that a lot of people are watching, and a lot of people are doing the same thing, accumulating versus those lows. Then the second option is to buy a little bit higher in the range, but buy tightness, anticipation. Maybe we just had an inside day, and this is the inside day, and you enter, towards the end of the day, expecting a breakout the next day. This would be an anticipation setup, and you kind of have to learn to see these and really train your eye well and study a lot of breakouts before you want to go ahead and buy tightness anticipation, because often you can get it wrong. It could just reverse down hard. But the benefit again here is you get a pretty good price, and your stop can be set at a higher low on an intraday basis, and you've got a pretty tight stop if you do end up being wrong. The second or the third here tactic here is, again, think of this as of a few ranges. If we get a few day range, 4-day range here, and then we get one day which shakes out in the morning and then rallies back through, that is often a really good spot to finally go ahead and enter, especially if the overall mature setup is ready to go. So we've been basing for a while. There's a tight contraction on the right-hand side. Then if we get a shakeout below that range and then a break higher, likely that momentum will continue and will break out of the overall setup. So this is kind of a short-term entry tactic within an overall larger setup. So here's the range. We get a breakout below. The first entry is as we rally back through the bottom of that range. You can enter that using your stop right at that reversal low. Sometimes this happens in the morning where we have a range set. Then we get a gap down below the low of the range, stopping everybody out who was anticipating or setting their stops at the low of this range. And then as we rally back through that low, they realize they were wrong in getting stopped out and they have to buy. And so that drives the price higher towards the high of that range. And if we enter at that point, we're immediately at a profit. Our stop is very tight at that reversal low, and we're at a good position. And then we can even add on, the next higher low as it approaches these highs, or after we break out for those highs, another pullback and resumption upwards. We can enter again, setting our stop just below the high of that range. Basically, we can set our core and even add a little bit more and look to sell some into strength. But this tactic is one of my favorites and is really, really good, and actually is what I used here. We have this range. This is the key pivot. This high is the pivot. Then we get a shakeout below this low, which is the low of the range. We also shake below the all-time high. We shake below the 21 EMA. So a lot of people who are setting their stops at the all-time high at this low of the day were stopped out. And then we rally immediately. You buy back through this low. I think I bought back, I don't remember my cost, but near this all-time high here. And you're immediately at a profit. You close the day right near the high. That's the optimal scenario. And then the next day we're looking for follow through. And the next day after that, follow through again. And this gives you a really good cost. And it's just a good way to make sure that the stock is nice and primed for a move higher. So this is probably my favorite, a range undercut and rally. Then the last is the classic range breakout. And this is, simple and it's timeless, right? The drawback here is you might not get quite as good a price, but you can often, keep your risk pretty managed. You have, a 4 or 5 day range. We break out through those highs, that clear horizontal line that forms. You set your stop at the higher low, and hopefully it's off to the races. And you can even add on the next, intraday higher low that forms, and hopefully have a nice profit by the end of the day. But here you're at a little bit of a higher price, but this is still a tried and true method that is very, very good, especially in strong markets. These will work from a mature base in a strong stock. So just wanted to kind of go through that because, how do you actually execute and apply these entry tactics? You use one of these 4 methods: accumulating versus the lows. So buying versus the 21 EMA down here. Anticipating, so buying an inside day. Undercut and rally, as I showed in that last move on the right, or just buying the range breakout. That's 4 tactics that we can apply to a tight range just like this on the right-hand side of a strong stock that has all the signs of a market leader. So a lot of people talk about, buying a cup and handle, but, just buying a cup and handle, the logical stop, the low of a range or whatever it is, the low of the handle might be 8, 10, 15% away. We're trying to find those tight ranges that allow us to keep risk even smaller, that allows us to keep risk in check, and that allows us in return to size a little bit bigger to get more out of the strong trends that we want to capture. So hopefully that was helpful. Let me know in the chat if that was, but I think that's a really important concept, is having these short-term entry tactics within the larger setups that allows you to manage risk really, really nicely. All right. Let's see here. Jeff asked a really good question. Richard, how many stocks are you looking at on these breakouts at any one time? My daily focus list, and this is an improvement that I've made, is 3 max stocks a day. I found that that's probably the max that I can handle and watch very carefully and find those low risk buy points. I used to have, a larger list, which was my weekly focus list, which I still have, but, I would look at all of them. I would set alerts on everything, and I try to be watching everything in the morning. And what that led to is I would miss things. I try to catch everything, and I would catch none of it. I forget which stock I missed, but I missed like a true market leader on a prime entry point because I was watching 5 other stocks at the same time. And that's kind of when I made the decision to, yeah, I have to, I might miss stuff because I'm focusing on 3 stocks versus 15, but I'm going to execute a lot better on those 3 stocks than I would on trying to execute on the 15 stocks. So I try to kind of really get selective every day. My daily focus list is 3 stocks max. And, I might miss a market leader, but if that market leader is in those, top 3, I'm going to really catch it with size and manage my risk really nicely and have a really good entry point, which is the best defense, and hopefully be along for a great ride. So, focusing on less helps me execute that much better. And let me know in the chat if you kind of do a similar thing. Let's see here. Yeah, the patterns we're talking about, I see somebody as a day trader. They apply on all time frames. Just instead of a daily chart, your higher time frame chart might be a 65-minute or a 15-minute. There's going to be more noise on the intraday charts, but the same patterns in terms of accumulation, trends, contractions happen on all time frames, which is what's so cool about trading. All right. So let's go ahead and move on. This is the breakout that was on the right side of this chart right here. This is a nice 75% move in a short amount of time. Again, we go rise sharply, go quiet and tight, break out again. But then here, we get another kind of extension bar. If you remember the climactic action for move 1, this is kind of similar. Obviously, it's not nearly the same. We do have some gaps, but this move hasn't been going on nearly at the angle or the extension that move did. But it is a gap up that eventually pushes over 15% from this close and reverses all the way down. And this type of bar often leads to a basing period consolidation like this. The difference between what we're seeing here and what we see with like MSTR over here is that this happened after the stock had already risen, 300% or whatever crazy amount it had. This bar is still pretty early in the run. This is just emerging from the first stage base back in here. So this just kind of leads to another basing period. We get another tight area here, which ultimately moves down, but then we get a positive expectation breaker again. And this actually happened on the announcement of the stock split. I think it was 10-1 or 11-1, but regardless, that kind of led to this gap up, positive expectation breaker, and a break through the pivot that was set from this tight area. And this would have been kind of the next optimal buy point on this positive expectation breaker, either buying earlier in the day on the gap up, doing a 5-minute opening range breakout, or waiting through for this break through the tight area high right here. And this allows you to enter early before this true breakout. And what the benefit of that is there's often a lot of volatility during a key, right near a key pivot like this. And if you enter early, you have cushion to sit through if there's a 1-day pull in or 3-day pull in and then reconfirmation. If you're just buying this breakout, where are you managing risk? This low of the day is 5, 6, 7, 8% lower. I don't want to give that back on a 20% position. I'd much rather find a tight area spot or use an intraday entry tactic to keep my risk, 2, 3, 4%. So I can size a little bit bigger and ideally have some cushion and enter earlier. So when this volatility happens, I just understand it's going to be normal price action and wait for it to tighten again, reconfirm as it did. And then I'm kind of along for the ride. So that's kind of the benefit of entry tactics, as well as entering a little bit lower within the base. But this in and of itself was a 60% move, nice trend above the 10 EMA. You could have used this as your trailing stop all the way up. And right here is kind of where it gets a little bit whippy. A very wide range bar, the widest range since really this bar right here. That's another tell that, hey, we might want to enter or be needing another base. Also, another tell is we get a reconfirmation up, we get a consolidation day, and then we resolve down, undercutting this low after this consolidation day. This undercut shouldn't happen if we're going to continue this trend. You can see this bar right here, even though it's a big reversal bar, doesn't undercut this reconfirmation bar. And we just kind of hold and keep building, keep holding that 10 EMA. Here we kind of change character, resolve down. Even though we close up, we gap down the next day, and that's where you kind of want to be letting go of your position if you're a swing trader entering from this period or some other spot right here. And this kind of starts another base. So this is a much choppier base. It lasts quite a little bit longer. There's a few spots where likely if you enter and they look fine, RMV went to 0 right here, we try to move up, we get no follow through. The stock just wasn't ready. So there's a wider and loose base. It's a little bit later in the move, and you get a bunch of failed breakouts here. But what finally drives the stock move higher, and this is why it's important to consider fundamental drivers as well, is we get the S&P 500 inclusion announcement after hours on this day right here. That leads to a gap up, and then finally that gives the catalyst that says, all right, Tesla, I'm ready to go and keep going as well. On this day, we gap up, close lower, but we hold, a decent area. And again, we're kind of waiting for day two. And day two comes and we re-break out, break through this level that we haven't been able to break out. This would have been a really good intraday buy point, either right at this level right here, managing risk at the low of the day, or early in the day if you can, with managing risk at the lows using opening range breakout, whatever the setup is. And from there, we kind of go up, go tight, reconfirm, pull back to 10 EMA, and just kind of trend higher and trend really nicely. Here's kind of this overall move. This was a 90% move, so a really nice run here. And we form almost a mini base in this area with this pivot. We get a nice oops reversal here. But again, look at how it respects that 10 EMA during its moves. The strongest stocks, and we've seen that a little bit with A-Lab and Reddit recently, the strongest stocks during powerful moves respect that 10 EMA and don't like to close below them. I don't think during this move at all it closed below the 10 EMA. With even this volatility, where's it close? Above the 10 EMA. So during a strong bull market with a strong leader, if you've got a good cushion, try to give it the benefit of the doubt towards the end of the day to close above the 10 EMA. And if it does, try to stick with it. But again, we get short-term extended. We see a nice kind of parabolic move again. It doesn't quite get as crazy as 2019, but still get some extensions, a lot of gaps up to the upside. And then we kind of form another base here. And this is where it's important to, keep in context the overall move. At this point, it's already gone up 1,500%, 1,900% from lows. And you kind of want to say, hey, what more can it do in a short amount of time? After a big move like that, it's not going to really have a high tight flag breakout, from that type of move already, from what it's already done. So here we do try to break out from this tight range, and it works for a little bit, but we get a gap down. So just noticing those signs of, it's not following through gives you fair warning that, hey, I might not want to be as aggressive. I might want to start letting some of my position go if I'm positioned from way back down here. And we hold the 21 EMA, but again, we never try to break out again. We start rolling over. We fade below the 21 EMA. You could see Tesla weakening in real time. We try to push higher, we rebound down. We try to push in the 21 EMA, we rebound down. We hold the 50-day moving average, we break lower. This is a big red flag here, where we break below the low of this range, we break below the 50-day moving average, pick up in volume, and you definitely want to exiting the majority of your position on a bar like this. And then the next day, what do we get? We get a gap down, good close. But at this point, the trend's now in a short-term downtrend versus being in a short-term uptrend. The 21 EMA is a great rule of thumb. If we're above a rising 21 EMA, we're in an intermediate term uptrend. Once that, trend flips, you don't really want to be giving the stock the benefit of the doubt anymore. It really has to prove itself to you, and it continued to kind of break expectations and break below lines in the sand. And this is kind of where that overall trend flipped. So that's a key thing to look up. I think it was Clay who was talking about sell rules. Above a rising 21 EMA and closing above that, good to hold the stock. Once we start closing below that 21 EMA, one close, two close, you might want to sell some, keep closing below, want to sell a little bit more. And then we break below the 50. That's probably where, as a swing trader, definitely, but even as a position trader in these faster markets, you want to be letting some go and making sure you, keep the majority of your profits. You can always buy back at the next setup, the next base, but you want to protect the gains that you already made. And then here's a screenshot that I want to include from Ross Haber's 2020 model book. He was looking at the same things in terms of RS line, new high before price. And there's a lot of good annotations here. If you go to the traderline.com website, and maybe somebody can drop the link in the chat, you can go ahead and sign up and take a look at all the charts in 2020 and, go at your own leisure. And there's a lot of great stuff in there. And you can go through where he said he would buy, how he managed the position, all of that. There's some great resources there. All right. So let me pause here for a second and see if there's any key questions here. And sorry if I've been going a little bit fast, but I'll try to slow down a little bit here. There's just a lot to go through. All right. Yeah, Jeff, really good question. No problem. Thanks for the question. The resource I mentioned far is the 2020 TraderLand model book. If you go to our website and go to resources and look at 2020 model book, you can make a free account and you can access everything. We've also got model books for 2021, 2023. I think we'll add the 2022 one as well. I think it's actually on there. And you can go through all those model book stocks, just like 2020, and analyze them, look to build that blueprint, that pattern recognition to find the next big winners. Yeah, awesome. Thank you so much. Zbigniew just put it in the chat, so go ahead and check that out. And that's perfect. Thank you so much. All right. Let's see here. All right, let's keep going here. We still got a lot to cover. So this is the failed base that we just talked about where we rolled over below the 21 EMA. Here we're looking on a weekly time frame. And this is the weekly setup for move 3, which happens and entries are kind of around this area. And we have kind of a 60% move into a climax run into 2021 here. And then we get an unfilled gap and just kind of roll over completely. So here's the move on the daily chart. And this happens in 2021, October of 2021. But here, as we form the base against the 200-day moving average, again, we tighten again, form that VCP, and there's a lot of potential entry points. And these ranges are actually pretty tight. This range right here, near this key pivot, is within 5%. So that's what we're looking for in terms of finding an entry point, because what that allows you to do is manage risk that much tighter when we do get a breakout from them. And from these type of areas come explosive moves just like this. So there's kind of two benefits there. But the key thing I want to point out here is respect for the 200-day moving average, respect for the 21 EMA as the base matures, and then respect for the 10 EMA as we get climactic and really push higher. And that's kind of your big sell signal. You know, you don't want to be dealing with this type of bar here. The gap down should be warning enough to sell, most, if not all of your position. And then as we break this low, break the 10 EMA, those are the last kind of lines in the sand where you want to let the rest of it go. But let's dive a little bit closer into the entry point. As I mentioned, this is kind of a 5% tight range. It's a little bit choppy here, but we do have the breakout here that could have gotten you into this move, and nice reconfirmation right here. But this spot right here is kind of the best entry. This is kind of that undercut and rally entry tactic that we talked about earlier. We undercut that low, that range, shake everybody out, then break through that high. That's your entry point. And then dealing with this choppiness, you've got a cushion. You can kind of handle it nicely, and you can kind of maybe add on that next buy point. But here, if you entered earlier from these tight areas, you're likely stopped out. So you always want to be realistic when looking back on these winners. Think about realistically with my routines, my entry tactics, my setups, where would I enter? Would I have gotten stopped out? Where would I manage my risk? These are questions you want to ask yourself as you're going back through these names. But this has been the best entry point, and then this one's a pretty good one as well. This is the climactic move. Again, we get the gaps, we get big expansion to the upside, big reversals, just volatility's increasing. We do have an inside day and it keeps moving higher. Another expansion bar, we're getting very extended here. At that point, you want to be selling some into strength. And then we form a tight range. And this is, at this point, you're thinking to myself, all right, if we break lower, I probably want to sell some, if not all of it. But if we keep going, I also want to kind of shed some because we're probably getting really, really extended. But instead, we kind of gap up, go tight for these 2 days as people are kind of selling their shares undercover. And then we get this gap down. And that's kind of the warning sign that says, hey, I should definitely sell what I haven't sold into strength already. And we have an unfilled gap here. We get this gap up, we try to rally and fill it, but we're not able to. The market sells it down. And then we get big reconfirmation the next day that, all right, the run is over. And you definitely want to be out near this low, or at the very least, below this 10 EMA. And this is actually only 10% off highs. So that's getting pretty much the max trade you can get. You're never going to sell at this high. But if you can, stay within 10% off highs, that's pretty darn good in a climactic move. And we do kind of rally, but again, we can't fill this gap that's showing that weakness. And ultimately, as we all know, Tesla kind of just chops around for the next 2-3 years until this recent move. and doesn't really go anywhere. So this is the unfilled gap here. This is the drawdown of 75% from highs. And then even after it rallies off lows, it's still not ready. It draws down again. And then not until here where we have these tight weeks and tight base here. This is where we kind of change the character with a strong rally up, tightness, and then strong rally up, and then other base, and then this move up, which finally breaks the high that we're potentially getting a change in character. And here, we'll talk about the recent breaks action in just a second. But first, going back to here, this unfilled gap on the daily chart led to a basing period from 2021 to 2024. So Tesla has a history of making model book moves and then going dormant and chopping around for years. And that's kind of reminiscent of a lot of leading stocks. Even if they go on to lead again, they often need a pause to let fundamentals, come back into reality, the growth to keep going, even as the stock is not doing well, because that allows you to consolidate and coil up fundamentally so you're ready for another expansion and another potential model book move. So move 4 has finally kind of started here in 2024. We've done 140% in 140 days from the VCP setup that I'll talk about. And the driver is kind of restarted growth. We're starting to see signs that that's picking up again. We've got autonomous driving. We've got some AI. We've got the robots they're making. That hasn't really contributed to revenue yet, but that's a theme or an idea, a potential end in can slim. And then, of course, we've got the election, which kind of drives the autonomous driving, where regulation might be more favorable. Obviously, Elon closer to the current administration or the upcoming administration. So that's kind of all contributed to an environment where Tesla can thrive again. So that's kind of the driver here. Again, we've got the unfilled gap, 75% drawdown. And then this is really the next move we're talking about, move number 4, right in this area. So here's a zoom in of, if we go back here, this is a strong move off lows on a weekly chart. This is the strong move off lows on a daily chart. We have strong gap ups on earnings that don't fill. That's a key sign of strength and a potential change in character, potential transition from a stage 1 to a stage 2. We have another gap up that does fill, but kind of just leads to this nice tight base, where in this base, you can see it's actually 5 weeks tight. These orange bars in deep view, I've got the technical patterns indicator on here, actually show tight weeks. And so this is 3 weeks tight and 4 weeks tight within the space. On a daily chart, you can see how tight it is as well against the 50-day and 21 EMA. And we set up a spot right here, a nice VCP breakout, where again, we coil, we get quieter and tighter. RMV goes to 0 right in this area as we start to break out. And this leads to a really nice move. This doesn't ultimately hold, and we do gap down our earnings and restart another base. But this is the first sign of accumulation and still very, very early within the uptrend. Here we get another base, and kind of similar to the base where we were waiting for the S&P 500 inclusion, here we're waiting for something, and that something happens to be earnings and then the election. Earnings, strong positive catalyst, volume picks up, nice breakout. We can't quite push this base. We pull back down to the 21 EMA. But then this is where things really get going, is we get the election, we get a gap up here, we get a move through this pivot, volume picks up compared to earnings, and you could use your day 1, day 2 entry tactics to start joining during these 2 days right here. But where it really gets interesting for me, and where really I got it on my radar, I was maybe even a little bit late to this, is this tight base that happens against the 10 EMA. Very tight action on the right-hand side. We'll zoom in on this in just a second. I put this into the TradeLab report. Hopefully many of you guys got it from that. And it was a really nice trade up here. We did have this reversal bar yesterday. This is when I took the screenshot, and we've kind of consolidated even more today. So maybe we need another base, pull back to the all-time high. But this is a really nice breakout move from this tight area after a stock has shown a change in character, gap ups on big volume, and a power trend. Then you look for that next tight area, and that's how you go ahead and execute and get a really good reward towards your risk. This is just about like a 2-3% range. If you can keep it that tight, then anything like this is multiples and multiples on your risk, and that's how you make the big money. Here's a zoom into the tight base that we went through prior. You have 40% off lows, multiple gap ups, signs of accumulation, tight action against the moving averages. This is the key pivot. Again, you've got kind of an upside reversal that primes the setup, and then you get a follow through, breakout through that pivot, and a really nice move before this Q reversal bar, which kind of signals that, hey, we might need another base, and then we leak below the moving averages, have a gap down on earnings, and then kind of need that other base. Then here's that other base again. Here's the earnings gap. Here's the election gap. You could use your day 1 or day 2 entry tactics here. And then here is the most recent setup where we had a nice outside day that again primes the setup within the overall tight area, within the nice overall VCP, and that led to the breakout to all-time highs. Here, potentially a reversal bar. We'll see if this starts to lead to a new base. If we go to, let's go just to a chart here and go to Tesla. Yep, so here, we've of course got the big base right here. This is the key reversal bar right here. And then today we held the 10 EMA, which is constructive, but we're still kind of pulling back. So right now it's just kind of a flag pullback, but maybe we need to retest the all-time high, which is about just under 420. So we're kind of testing it right now here. So we'll see how it respects that key level. And if we go to, let's actually delete drawings and let's go to a weekly here and draw that line in, because this is the key level that I'm watching here. So if we draw that line in, go back to a daily, you can see how we're pulling back, respecting that level, and we'll see how it acts versus this. If we leak below it, that might be a sign that we need a deeper correction, and the 21 EMA would be the next key level that I'm watching. But if we show respect for it, tighten up here, that could set up another really nice range. We'll see if RMV comes down and if we get a few days of tightness and then a resumption upwards of this trend. Right now, considering what the market is doing, if we bring up the QQQ, look at what the market did on this. Oh, just Tesla. And you know, Tesla obviously had a bad day, but not nearly as, you know, trend breaking as what the QQQ did. And it's holding up above the 10 EMA, while the QQQ is below the 10, below the 21 EMA. You had another bad day here. Tesla closed a lot off its lows. So Tesla, relative to the market, is still showing relative strength. And that doesn't mean that it's ready tomorrow to be bought again if you're not already in it, but it's something to be watched carefully, added to your watch list, and stocked for the next entry tactic, the next setup that meets your personal criteria. So this, along with A-Lab, wow, I can't type today. A-Lab, you can see, is just pulling back constructively as the market is really falling apart. It doesn't mean that this won't fall apart. Just right now, it's showing relative strength. We have to kind of take it day by day when it comes to RS during pullback, market correction, whatever you want to call it. But stocks that are holding above the 10 EMA as the market is breaking below it are showing relative strength. And it's a good sign that Tesla is doing that, as well as respecting that previous all-time high. So we'll see what happens. But this is the key level that I'm kind of watching to judge, say, hey, above the line, Tesla is very, very strong, showing healthy price action, just kind of got ahead of itself. Below the line, all right, we might need a deeper base, deeper correction before Tesla might be ready for another move. But right now, it's kind of restarted another stage 2 uptrend. And this was the last kind of ideal buy point, this day, outside day, or on the follow through the next day. And we just have to kind of wait and see for the next good low risk buy point. So that's kind of it in terms of the recent price action. Some key lessons here. First, a liquid market leader in a strong market can create triple digit returns. Again, if you had a 20%, 25%, even 15% position in Tesla and were able to ride it for triple digits, you had a hell of a year in 2020. A big key with Tesla is that all its moves started from big bases, 2-year bases, 4-year bases, significant correction with the March 2020 crash. So moves from big bases often last a lot longer than we think and can go a lot further and higher than we think as well. Another key takeaway that I want you guys to have here is tight price action on low volume near a clear major level is a prime entry point. So remember the VCP setup after the March correction, where that last tight area happened right near the previous all-time high. That's what we're looking for in determining, you know, when a setup is really ready to go. We're looking for entry tactics near a longer term key level. That's what creates the most explosive moves. Then kind of thinking about back at move 1, after an earnings gap, look for a tight range. It could be right after, it could be, you know, weeks after as the stock sets up another base. But an earnings gap is basically saying that the street, the market, whatever you want to call it, has changed their opinion of the valuation and the prospects of that stock. And if that stock holds up after its earnings gap, look for that next trading range that next tight range, because you could just be catching a stock very early on in its move, and it could have a really nice strong trend above the 21 EMA once we kind of continue higher from that earnings gap. Then also the best moves have multiple stages after market corrections. You can see how Tesla kind of reset multiple times. And then the best leaders can run again, like Tesla, just they need kind of another basing period. We saw this with NVIDIA as well. After that big 2020-22 correction, it reset and had multiple really nice moves, basing each time the market corrected. Here's kind of a monthly view of Tesla. This is the nice IPO move that I talked about, model book run, then basing for 2 to 5 years here. Then this was kind of move 1 that we talked about from the earnings gap. This was move 2 from the VCP setup in 2020. And then this is potentially another model book run that it could have from, again, this longer term VCP setup, new stage 2 uptrend. So whatever you want to call it, we just like to see nice pauses, breakout, pauses, breakout, pauses, breakout. We talked about how fractal the market is on intraday timeframes. Well, it happens on monthly as well. We want to see sideways, breakout, sideways, breakout, sideways, and we'll see if we can really push from this high right here. But obviously the market right now, the market in the end of 2024 was excellent. We might be seeing signs of weakening here. So we'll have to see if this kind of consolidates, pulls back bases as the market does the same thing. So in terms of an overall takeaway from this video, it's all well and good to look back on Tesla, but what we really want to do is build a blueprint of what a future Tesla could look like, a template to look for, to screen for, to look at in terms of technicals, fundamentals. And here's a kind of a list of things to look out for from studying Tesla so we can apply it to future ideas. So first, liquidity and high ADR percentage. So Tesla was very liquid in terms of dollar volume, but it also could really make some nice moves. High ADR, when it did move, it moved 20, 30, 60%. And so this combination of highly liquid, but also high ADR is kind of what led to MSTR's really big move. And it led to NVIDIA's big move as well, is that large institutions are very comfortable taking positions because they know they have exit liquidity and can move in and out without really impacting the market too much. Then again, we've talked about this, a big base and respect for moving average is a hallmark of a leader. Explosive fundamental growth, new products, execution is a key kind of shift to look for that can lead to really nice stage 2 uptrends. A leading theme like EVs in 2020. High relative strength, we talked about RS new highs before price during the correction, and then earnings gaps, VCPs, those are also blueprints of a market leader. And right now, for everybody watching this, I want you guys to think about yourself, what would you add to this list based on what we've talked about today with respect to Tesla? What would you add to this list to look out for in the future to find a future leader? And put it in the chat here and put it in the comments if you're watching this, the recording here. High volume on breakout. I like that, Al. Very nice. And a good ADR for me is like anything over 3%. I think if in terms of ADR percentage. That's a good question here. Strength in a weak market. That's good. Very nice. Market behind you. That's a key edge for sure. Nice job, JV. Rising moving averages and respect for the moving averages. Very good. Look at the future. Yep. You want to think about what themes are emerging around you and what stocks can benefit from that. We've seen nice moves from the nuclear theme and alternative energy because there's the need for more electricity with AI, as well as semiconductors, databases, data centers, all of that. Tightness after breaking out, very good. Clustering of horizontal SMAs, very nice. Gap above consolidation, very good. So yeah, awesome. You guys are dropping great ideas here. Gaps not being filled, that's definitely another blueprint of a market leader. Very good. So think to yourself, what characteristics are you going to look for in the future after studying a stock like Tesla? And then this is kind of a thing I've been, a thought that I've been thinking a lot about, and I've talked with Oliver Kell a lot about this because I've watched him trade Tesla and then NVIDIA the past 2 years and just kick ass with them. Is, the liquid leader of the market is what you want to be in with size, and really should be your focus. Every new uptrend, you kind of want to, and this is kind of from a position trading mindset, not necessarily a swing trade mindset, but as a position trader, if you want to have really strong performance, you want to have size in the leader, not just a leader, the leader. So NVIDIA in 2023, 2024, You want to have size in the top 3 leaders, in the top themes, in the top groups, all of that. And that may mean, avoiding a good setup in another stock that's more of a secondary name. That's just kind of a distraction versus waiting and stalking for the leader to set up. So if you missed Tesla early on in the base, you still would have had much better performance if you had waited for the next tight area and for the next buy point to set up versus trading a lot of other things, getting mentally drained, emotionally drained, financially drained if you got stopped out in other names, and you're just kind of distracting yourself from your main target and what your focus should be. So this is kind of what I've been thinking about, and what I've been trying to improve on every single market uptrend is picking the top 1, 2, or 3 names and really just trying to be very patient and wait for them to set up a tight range where I can enter and manage risk using the entry tactics we talked about. I did a really nice job with both Reddit and A-Lab, this most recent market cycle, Tesla at the end as well. So, I think you're best served in strong uptrends with being in the leaders and being in the liquid leaders, because those are what's going to make the cleanest moves, the strongest moves, and what can really, build your account quite quickly. So just want to end with this thought here. So that's kind of it for the presentation. We'll take questions in just a second. But I do want to mention, and excuse my bad graphics here, we're doing the Trailline holiday sale right now. It's currently live. You can save quite a bit on all our masterclasses with U.S. investing champions, legends like Stan Weinstein, Oliver Kell. His masterclass, his swing trading masterclass, is probably the thing that taught me the most about trading outside of the first class that I learned from Dr. Wish. This is an amazing resource, his masterclass. Jared Tendler, his trading psychology masterclass can benefit any style of trading. So I saw day traders in here, swing traders, whatever your style is, mastering your mental state, learning to analyze yourself, analyze your emotions can benefit you and improve your performance. And that's what we really did with this with Jared Tendler, who's a mental game coach and author, is we did the trading psychology masterclass where he teaches you a system to analyze your mental state, get to the root of any core issues there if you need to, that can really unlock your potential. So I highly recommend that if you haven't, done any training regarding that. John Boyk, market historian, his historical analysis masterclass is exactly what we just did today, just on a much larger scale. We analyzed Darvis, we analyzed Wyckoff, we analyzed historical markets, net new highs going back to the early 1900s. We analyzed top stocks in those times and how they performed, setups, all of that. This is probably the most underrated masterclass that we have. So if you haven't considered it before and liked what you saw today, definitely check out the historical analysis masterclass. I think it's a fantastic resource. Everything we have on the Trailline University site is something I personally worked on, extremely hard to bring out the best of all of our excellent, amazing educators who have been there and done that. U.S. investing champion, U.S. investing champion, author, market historian, the market historian, Stan Weinstein, obviously a market legend, other traders we worked to, Eve Bobach, Kathy Donnelly, money managers, hedge fund managers who have been there and done that. So I can vouch for every single one of these masterclasses, and I think they'll really help your trading. So check out the holiday sale if you haven't already. If you've already taken some of these masterclasses, let other people know who are watching this right now. If you enjoyed it, if you enjoyed the classes and found them useful, that would be great to let them know. And also, as a kind of bonus, I emphasize the swing trading masterclass because I think if you haven't taken any of our masterclasses before, that's the one to start with Oliver Kell, 5 amazing webinars where he walks through his full system, very in depth. And for up until the end of this weekend, we have an extra $100 off code here that you can use. You guys are the first people who are hearing about this right now. So go ahead and use the code extra100STM, and you can go ahead and get an additional discount on the swing trading masterclass for a limited time only until the end of this weekend. So definitely go ahead and make use of this if you haven't already. You can see a bunch of nice feedback from previous students here. We've had hundreds and hundreds, well over 1,000 traders take this, and there's been amazing feedback. So definitely go ahead and take advantage of that. And let me go to the end here and go back here. So that's pretty much it for the presentation. Thank you guys so much for your time, and I'll answer a few questions here and see what we can cover here. All right. Yeah, so thank you guys so much. There's a bunch of students of our master classes in here that are vouching for them, so definitely check that out. Again, tradeline.com/university. All right. Clay asks, what is the best way to find the leader? It's tough, and it's something that you're always going to be working on. I'm always working on it. I missed a lot of NVIDIA in 2023. I was focusing on other stuff that I really shouldn't have been focused on. And really, it's a process of always trying to say, hey, what is the strongest liquid name that's in the theme, not a theme, the theme. For a lot of 2023, 2024, it was semiconductors. So what's the leader of that group? What's selling the most stuff? What's leading the market, setting the standard in terms of technology and on the edge of that? And the answer is clear, NVIDIA. So it's kind of thinking for every uptrend and every theme will have a different name. But it's kind of thinking, what is the stock that every institutional growth manager must own right now? And that's going to be your leader. And for a lot of the past, year and a half, 2 years, it's been NVIDIA. Maybe it's transitioning back to Tesla here as semiconductors weaken, but we'll have to see. But, it's always a judgment call, but you can kind of figure it out by paying close attention, thinking about the fundamentals, technicals, pairing that all together as we did in this webinar. But really good question, Clay. Catherine adds pullback on low volume. That's another characteristic to look for sure, for catching the next leader. After a powerful move up, pull back on low volume. That's excellent. Let's see here. All right. I don't actually see too many more questions here. Where do you place your stop? I usually place my stop at the low of the day that I enter on a tight range breakout. So if we have a range that's kind of here in this area, if we're breaking out here, I'm usually placing my stop just under the low of the day. So if that low of the day gets taken out, we reverse that breakout, I'm stopped out. I might still watch that range. Docs just reset today and broke out again. But I keep my stop very, very tight relative to the ranges I trade. That gives me the confidence that, hey, even if I'm stopped out and lose a very small fraction of my overall portfolio in equity. And I have full confidence that on the next setup, I can make that up, 5-fold, 3-fold, 10-fold, 20-fold even. So that's where I usually place my stops. All right. All right, so let's see if there's any other key questions. Yvonne says, Richard, isn't it better to have an alert instead of a stop to avoid algos triggering those stops? Really good question. I always have a hard stop in with my broker because, stuff can go down, you can lose power and not be able to access your position. And if you're trading thousands of dollars, you want to make sure that's protected and you're always have a worst case stop at least in with your broker. For me, if I can watch the market every day, but I don't want to. I'd rather be able to enter, I usually trade 9:30 to 10:30 is probably where I open most of my positions. And then I want to go walk my dog or work on deep view or work on TradeLab projects and that type of stuff. I don't want to be worried and glued to my screen the whole day. And, there's a phrase by Darvis, I decide to let my stop losses decide. And knowing when to stop yourself out and knowing when to sell is such a key decision to make. And I'd rather be objective with it, set my stop in and forget it, and then adjust it as I need to as the stock moves up, than have to be constantly be worried about getting an alert, missing it, not getting stopped out, vacillating if I should stop myself out or not. I'd rather just kind of set it objectively, deal with it. The low of the day is a pretty clear line in the sand on a breakout day. So that's kind of how I usually handle it. But, I think Oliver uses alerts and, deals with it on a, as they come basis. So there's no right or wrong way. Just I found what works for me. Oliver has found what works for him. Every trader is going to be a little bit different. You have to kind of figure out what works best for you. There's pros and cons to alerts. There's pros and cons to setting your stops in with your broker as well. Really good question, Yvonne. Oh yeah, the code for STM, which I would highly recommend, sorry about that, is extra 100 STM. So extra 100 STM. And I definitely recommend Swing Trader Masterclass. If you haven't taken a trade line course before, this is the best one to start with. And then you can kind of go off on your own path if you want to learn more about trading psychology. Jared is excellent. More about history. John Boyk is great. More about stand system. Go to the Stage Analysis Masterclass. Leif's High Side Flag Masterclass is really his Swing Trader Masterclass, his perspective on it. So yeah, it's kind of what you would like to learn more, and I can highly recommend all of these different masterclasses. Yeah, extra 100 STM. If it's not working, please let me know. But yeah, we can always fix it. But if it's not, I'll email it out very shortly and make sure it's working. What broker do you have? I use Interactive Brokers, IBKR, and I use just stop orders. All right. What is your target position size for liquid leaders? Really good question. It's gotten a lot higher, and especially during this last uptrend, I think I did a really good job with Reddit and ALAB. My target size is 50% of my account in the liquid leader or one or two liquid leaders, and that's pretty high. But my entries are very, very tight, and I might be adding to additional points, managing risk along the way, so building into that size. So 50% sounds very big, but I manage my risk as I go into to get to that size. And in the liquid leader, it's very easy to exit, and I can manage my risk really nicely. And it just allows you to catch really good trends if you do catch them right and pick the right stock. So that's kind of my target size. I won't always get to that. My starting position size now is about 25% of my account. And then I'll build onto that if there's another setup and look to add more into a stock that I deem a leader. All right. Very nice, everybody. Hopefully this is helpful to you guys. Let me know, any feedback you have. But again, thank you so much for joining me today. Hopefully you guys enjoyed. If you're watching the replay, please go ahead and leave a like down below, subscribe to the channel. If you haven't already yet, check out the tradeline.com/university for our holiday sale. There's some great deals on the table there. And I'll also be emailing out some additional deals for DeepView, as well as some of our other products. So thank you guys again. Hopefully you guys found this very helpful. And I see some nice feedback in the chat. So thank you guys so much. And we'll be sending out the replay in the next few days here as soon as it's processed. So thank you guys all for joining me. And I'll see you guys in future videos. Take care. Bye.